What is going on, YouTube? Good morning, good afternoon, good night, wherever you are. Thank you for watching this video. First off, so I had a friend challenge me to pass this top tier traded challenge from this prop firm, top tier trader. I passed both phases a week each because you need 7 active trading days on both phases. So it took me a week on each account. So 2 weeks total. Here are both certificates. You have the tier 1 certificate for phase 1, phase 2 certificate, tier 2. Eternally grateful, of course, for passing the challenge. So how it works with this, I did take the 100K challenge. How it works for there's a plus challenge and then like a regular one. The plus challenge lets you trade over the weekend, so pretty much you can kind of pass it quicker. I used some buffer, I'm gonna call them buffer days on the weekends because I don't really trade crypto or anything like that. So I put like 0.01 Bitcoin open close just to hit it as an active day until we got back to the trading week. I mainly trade currency markets and U30. So my risk management with this account was pretty much not to lose. I don't like to lose more than $1,000 on a trade, unless like I'm up that same day. So say if I make 3,000 or 4,000, I'm willing to risk the 2,000, or if I make 2,000, I'm willing to risk that 2,000 to gain more. Because I know I can probably more than likely get it back on the next trade. So here's the interface that they have, the dashboard, I guess you can call it. You can see the profit target, hit status account was upgraded to the phase 2 account, which was this one. 9 trades total. Really was like, I think it was like 5 trades to be honest. And then I used these to buffer, like I said, the buffer trades I was talking about to get the active trading days out there. So kind of the win loss is kind of irrelevant because I was losing trades just to pop a trade. And here is the first phase, first phase trades. So I took these losses on AU. So let's go to AU really quick. This was around the same day, 9/16, and it looks like I scaled in on these trades and closed around the same time. So 66875 on AU, which was right around here, and then the date was what, the 16th, right? So 16/16, right around here. I'm not sure how accurate the time is because I don't know what servers this is going based off of. I guess it's the same vital market server. So if it's going off the MT4 service, the time is kind of wonky. So I would mainly just pay attention to the date, to be honest. So 66875, right, on the 16th. That was right around here. And this was a Friday too, apparently. 66875. All right, so as we talked about earlier, I'm only willing to risk like $1,000 per trade, especially when I'm just the account is just starting, because I like to build like that cushion, that buffer room, to effectively up my risk a tad bit if I'm confident. My risk management plan also consists of like I truly believe your skill set determines your risk in this market. Understanding of the higher probability trades, because what Forex generally is overall probabilities. It's a probabilities game, so you always want to take high percentage trades, you know what I'm saying, that almost 100% will work out. Obviously nothing is 100%, but you want to get obviously the high probability type of setup. So around the 16th, I probably took this trade because I trade mostly like New York sessions, so I probably took this trade like right around to here, more than likely. So AU's overall on the bearish trend on your high time frames as well. You can see all of these lower high points being formed throughout this entire area. So this trade was probably based off of seeing this bearish engulfing pattern here. I'll highlight it for you really quick. And we have this bearish engulfing on this hourly time frame, and it also broke this key level of support, which is marked off by this purple line. As you can see, every time price came back to this level, we have a nice rejection. Price finally broke through. So you're expecting a continuation for that support that was broken, and it now turns resistance and that continuation leg, right? So after seeing that bearish engulfing, I mainly trade based off of like top-down analysis. So I like to see what the higher time frames are doing, and then if it's in like that sweet spot that I like, I will break it down to lower time frames to get a nice clean entry. So I'm on a 15-minute now, and I see this market structure forming here, right? We have our downtrend forming, and then we have this counter trend that happened within this same impulse leg on a 15-minute time frame. So after seeing this higher low point form, and then we have this break of this level of support, I'm not in a rush to jump in the market because I'm a very reactive trader. I'm not an impulse trader. So after seeing this market break this level of support, it confirmed that the sellers, to me, are ready to push this market a bit lower. It retraced a little bit below my 50 MA here. Also another a nice little confirmation I like to add towards the latter side, because market structure always comes first for me. Market structure is king. And then we had this little bearish variation around here. So just based off of that, I hit the button like that, boom. Sells came in, I was in profit a little bit floating, and then I seen this, the way this level was being respected, and after seeing this high low point form, that was more than enough reason for me to get out this kind of market to see if this price was going to follow through. But my risk was about up here, which is around, and I was trading a 5 lot, so it was definitely around 1,000 to 1,500 range. And then it rejected and came back, and then I lost $100, so that was only like 2 pips on a 5 lot. So after seeing this double bottom form, I hopped out the trade just like that, because seeing these high low points form on the support is more than enough indication to me that this market's probably going to retrace just a bit steeper before it actually sells off. That's pretty much how I lost that trade really quick. I'm not trying to spend too much time breaking down the trades too much. I'll try my best to keep it informative and concise though. But that's how I lost that trade, right? And then a small little trade on GU, nothing worth a mention really. I was looking for sells on GU as well. I mainly trade like GU, U30, and AU. So this is around the same time. So it was the 16th. Boom, like right around here, right? Yeah, so I took these sells right here. So based off of the break of this level here, this was pretty much our key level, our lower low in this entire market structure, right? Boom, lower low, lower high point here, another lower low here, boom. So just based off of that, this is my base. This is my market level base. So if price breaks beneath this low, I know we're going to continue on to make another lower and continue the overall downtrend that we're seeing. We had this major retracement, major rejection, high low point form, but then we had a lower high point form within this entire market structure, continuation, boom, break of this level of support. Now I know I'm short, point blank period. So it retraced a little bit, then we had this major rejection here, not a major rejection, sorry, but just a break of this level of support, and then newfound resistance here, using the same level that was one support, now turn resistance. retraced, tested it, bearish engulfing. That was more than enough for me to get short here. I think that was that straight, right? And the entry was 13979. 13979. Let's see, 13979. Yeah, that was around here. So boom, right? So it was on the 16th on that same Friday. So it was probably around here. That makes sense. Okay, so after seeing this exhaustion, I thought the Friday was going to continue to close out that weekly super bearish on a weekly time frame, to close out like a nice bearish candle. So after seeing this exhaustion on the 4 hour, the way this first candle had closed, I'm thinking it tapped off of this level of resistance and we're going to see a complete continuation, right? To close out the weekly nice and strong. So just based off of that, we had a nice tap, boom, tap and go, and then we had this rejection. So after seeing this bearish engulfing, that was enough for me to enter this market. Actually, it was probably here because I actually had this confirmation here based off of this was our lower low on this 15-minute time frame. And then I seen this counter trend had formed because you always want to wait for price to pull back. You do not want to get in on a lower low because you don't know how far it's going to go before it actually starts that counter trend retracement. So we had this counter trend form. We have all our higher low points, boom. And then we have like this this break of this level of support, and then we have also another break of this minor level of support that established itself like right around here. So I'm kind of, just to show you how I'm looking at structure, I'm looking at it like this, right? Higher low point, another higher low point here, boom. Then this break of this level of support. And then we have kind of like this pullback here. And to me, this is like stiff price. And what I mean like stiff price is really tight. All of these candles are 15 minutes. So seeing how price like was kind of respecting this level of support for a decent time period on a 15-minute time frame. After seeing that break of this level of support, this retest, this was my entry candle, and it falls right along my risk to reward ratio. I'm gonna bring up another one because this one is too big, so I'm gonna just put this here. And then around 20 pips is my risk, right? Because that's $1,000. So after this push, had a nice rejection candle here, but I did not like the way price started bunching up around this level here, boom. So after seeing this rejection, I took my profits because I thought this level of support was going to be respected and then continue this counter trend how it was doing. Because like I said, I'm a very reactive trader, so I really pay attention to the candlesticks and the waveform. Obviously, I missed out on this like minor push back to this level of support here, which is fine, because I was mainly looking for the overall move on the overall time frame. So I was willing to wait, especially it was Friday. So I started to count like on that Thursday. So it is what it is. I was willing to wait till next week to actually really start the challenge, right? So the week ended. Then we have this 18th and 19th. No, the 17th. No, we were right here. This is the GU trade. So this is our the buffer trades I was telling you all about earlier. 17th, 18th, that was the Saturday and Sunday. Put 0.01 just to qualify it as an active trading day. And then we start on Monday, right? So that's around, Monday, 19th. So took buys on U30. Came up $2,400 here. 306.15 was our entry price. So let's slide the U30 really quick. So overall, you can see just like mostly all across USD pairs, overall bearish stock market, all of that stuff, right? So overall in this structure, we're completely bearish. Lower high points still being maintained even on the weekly time frame. We have lower high points, break of this weekly level support, lower high point. This overall lower high point was being tested, respected it, boom. So obviously we're still in this range here, right? So seeing that range, I was willing to trying to catch the rest of this sells back to the downside. So I'm definitely overall bearish this week. Not this week, but the week of the trade. I was trying to hop on the continuation of these moves. So 4-hour structure, we see we have rejected it on that weekly time frame, right? That's this big bearish push here. This qualifies as a key level to me, just based off of the bounce that it had received all in this entire area. So as you can see over here, we had a bullish bounce. It created this whole entire this uptrend over here, and then once price got back down to this level here, boom, we had another bounce. So to me, that's telling me it's a lot of trading action going on at this level, of support. So after that was qualified, right? The week open on here, so we're talking about the 19th, the week of the 19th, which is here. So price broke and gapped down beneath this price. And in my eyes, that is a broken level of support. So once this level of support was broken, all I'm doing is just waiting on some sort of retest back to this same level where this purple line is, and then a rejection, and then hop on sell entries all along these lines, right? So as the week opened, I let Sunday flush out, right? And then we have this level of support that was formed on the weekly open. So after that was established, some sort of counter trend could possibly take place, right? It's a possibility, not a guarantee. So after having this area established, this the 19th, like I said, I mainly trade during New York session. So this was around that 6 a.m. period when I wake up to do like pre-market analysis and things like that. And then on this hourly time frame, it looks like a decent level of support, right? So meaning if this level of support breaks, we'll see that continuation of the overall bearish trend. But seeing as the week just opened, I'm not looking for too big of a move to the downside, because I feel like the week needs to like flesh out first for that real volume to kick in. So that was kind of part of my analysis with this buy opportunity. So this was the 19th, right? And then this is around that New York session time, 7 o'clock, 8 o'clock, 9 o'clock, 12 o'clock, all of that stuff. So price settled here for about 2-3 hours. And after seeing this one candle here, this lets me know that this level of support might be respected. And from then on, I'm ready to go down to my lower time frames to possibly catch a short counter trend entry back to my 50 MA. So after seeing this, this is part of like my trading process, how I'm thinking of when the market moves. So how far price was from the MA, seeing this bounce on a level of support, plus we have this level of support that was already established. Then we had this bearish and bullish candle, also establishing that level of support. I'm ready to go down to my lower time frame to see if I can find maybe a counter trend opportunity if it presents itself here. So I'm gonna just use the replay tool so we don't have to keep scrolling back and back. So any buy opportunity I took here, I was looking for all the confirmations in the world because we're in the overall bullish trend. So on this 15-minute time frame, we have higher low point being formed at an hourly level of support, also established on the 4-hour, right? This gives me a decent amount of detail, but I also need more detail. So our entry was at what? Our entry was at 306.15. So let me just put this here, 306.15. Excuse me. And like I said, like the risk, maybe my risk management on this account was pretty much just to risk $1,000 per trade, that 100 to 150 point range on U30. And having seen this was not enough confirmation for me. This was adding to my confirmations, right? So we have the hourly 4-hour base support. We have the hourly close, the way that doji had formed with all that settlers exhaustion and a nice bullish candle. So to see more detail, I'm gonna have to zoom in a little bit. So I'm gonna go down to the 5 minute. 5 minute is kind of like the lowest I will usually go, but I'm also combining this with the higher time frame analysis. So just watching 1 minute structure, right? Or 5 minute structure. Sorry, we had this higher low point still being formed, and then we have a nice, just this nice push right off of this level support where this black line is, and then once price came back, retraced pretty much all of that. I had this nice close above this level of minor resistance on a smaller time frame, and then I had seen how it crossed the same 50 MA. It's either, I think I've been modifying, I've been playing with it, so it's either 50 or 66. Yes, so 66 MA, my 66 MA on this pair actually. So it pushed above this, and then I seen like this kind of exhaustion, like it was going to turn this resistance into a level support. So I entered based off of these wicks here. So obviously I seen a little bit of drawdown here, but my threshold was this 1,000 pip limit, because I knew if price comes down here, my trade outright is just invalid. We're probably going to see that continuation if it breaks below this line, right? So that's okay. I wasn't really panicking. If I lose, I lose. That's what Forex is. It's a probability game. So overall target was where that 66 MA was, which was right around here. And it hit target like beautifully, right? What caused me to get out the trade was this specifically, right? So after seeing this hourly push back up, we hit our around this whole key level type of area where this purple line is that we talked about before. And after seeing price wick out, reject it, and then I was willing to hold past this hourly bearish candle because I wanted to see if it was going to engulf this, right? It kind of kills the risk to reward a little bit, but I was willing to, actually risk where my stop loss actually was. I was willing to give back those profits, because in the Forex market, in order to like maintain your trade like properly, for like higher time frame continuations, you have to give back to the market to get more from the market in most cases. You know what I'm saying? So after this had rejected, we had a nice bullish candle pop off back above this, almost above this bearish candle that happened, but it didn't quite close above it, and it also like wicked out where that 66 MA was. So for me, that was enough for me to get out this market and just take my profits. So at this point, the account is up around 2,400, right, off of that one, and then these small trades, so probably around 2,800 with this included, right? Well, I guess this made up for that. So yeah, around like 2,500, if that. Next trade I took a sell that same exact day, lost 2,200, around 200 was like 2,400 together. So pretty much I was willing to risk the profit that I had just made off of that trade, trying to finesse the market a little bit, because how this was forming, I tried to catch that sell back down to maintain this range. But obviously we had a steeper retrace than I anticipated. 30, how long we running right now? We're running 23 minutes. All right, so 9/19, same day, 30804 and 30791. 30791, which was around here. Yeah. So yeah, pretty much what happened was I was trying to obviously finesse the market, catching the extra sell. But the main point I really want to point out is that I was willing to lose the amount that I had made. That's why I took that extra bit of risk, that 2,000 instead of like that 100 to 150 pip, 100 to 150 point range, right? I seen this lower high point form, and then I seen this bearish engulfing. I'm pretty sure that was as simple as that, and based off of that level of resistance, right? It was as simple as that. Once I see my confirmations, I just entered the market, no hesitation. So took this trade, obviously it ran up against me. I was willing to risk that 2,000 that I had made, simple as that. we pushed past this area, which made the trade invalid, which was like pretty much the high point in this established mini uptrend that we were on, this counter trend. So after it broke past that, boom, we took our L's, whatever. Already kind of broke this down for myself a bit. So this was pretty much just a trade I was willing to lose that profit on. So same day again, I went back, kind of a slight revenge trade. I'm not gonna sit here and lie to y'all. 310.14, but it's because I believed in this short so much, because I was overall bearish on this market, and I was kind of anticipating price to come back to this level and then reject it. So I'm pretty sure I took that trade based around this area right here, on the same candle that kind of went up and down, because I thought it was going to respect this level here still, because for me it takes at least 2 bullish candles for it to break. So we was in the middle of this candle. That was a mistake on my part. I didn't wait for that candle to close, right, to confirm that break, which it did. Second 15-minute, boom, close above, and I lost 800 based off of that. So that was pretty much like 80 points on U30. Lost that trade. And then after that, let's go to page 2. We have another loss, minus 221. That's okay. I probably took it again based off of how this candle formed here. I'm pretty sure that's how it went. And then this thing flipped on me again. But I was like almost at like my breaking point, not breaking point of anger, but breaking point as in like I'm just done for the day, whatever. So I probably seen like a little bit of blue, and then I seen it go negative. Then I was just like, all right, fuck the whole trade, whatever. I'll just wait. And that's when the next day kicked in on the 20th, right? So 20th around the same time New York session, because that's what I trade, like I said, which was right around here. I'm gonna have to clean my whole chart after this. I shouldn't have saved the data. That's okay. 20th same time New York session, around 7 to 10 p.m. I took I think I took this L on, actually this was the U30 trade I took that same day. So this was 310.79 on the 20th. So 310.79. Yeah, so that was up here. So I actually had a decent entry on this, but I took out because I didn't like the way price started. It was really slow, right? This is actually 2-3 in the morning, so that doesn't make sense. Hold on, 310.79. So I must have, oh, this was right before I went to sleep, maybe, and I tried to make up, maybe, and I just took out. That's what I'm guessing happened. Sorry, this was like 2 weeks ago. I don't remember exactly. But then, all right, next trade, moving on, GU 5 lot sells, right? So I might have to break this video into 2 parts, which is okay. I might have to edit the thumbnail and all that stuff, whatever. I'm not really too used to creating YouTube content, but we here. So GU sells 5 lot at 14.325 on the 20th, so right around here. This trade was kind of textbook in a sense. It played out beautifully. And then I'm gonna just put my like around 25 pip stop loss. So at this point, the account is at what? Almost at like, we took this trade, lost that trade, then we lost 800 more. So around like 92,000, right? 90,000. No, sorry, that's way too. That's like losing 10,000. I'm tripping. 99,900, somewhere around there. Sorry, I'm too focused on the candlesticks. Can't do proper math. I'm tripping. So this right here, this trade, yes, yeah. I'm still going over it in my, yeah, it's like 99,000. Yeah, 99,000. That's where the account is, somewhere right around now. I remember. So 24.30 was the profit on this trade. So right around here, we already established the break of this level of support on this 4 hour time frame, which was our main base for this market, right? So coming into the trading week on this day, the 20th, we have a nice level of resistance here. I marked off with this blue line on the 4 hour. So this was a nice break, retest, newfound resistance, support broken out, newfound resistance. Price came up, tested that level again for I guess a minor double top pattern. If people like to call it that. So after price was came back and rejected, I was kind of like on that after seeing that 4 hour time frame, the way it started dojiing out at this same level. The only thing I was really looking for was this some sort of rejection from the same level, which we had based off of this first rejection here, boom, and then price came back up, tested it again, bullish candle, then a bearish candle. Note that we did not have another bullish candle above that level of resistance. So to me, that level is being tested, respected, never broke. So after seeing how that hourly candle closed like this, boom, went to the 15-minute. Generally 15 minute honestly lately has been really, really sweet for me. Like, I don't know what it is, but the 15 minute has really been on point for me. On average, I probably last 2 weeks I've been entering off the 15 minute mainly, but I do cycle through 30, 15, and 5 for my entry type time frames. All my analysis time frames are higher on the hourly and up. So we have our minor structure playing this role here per usual, right? Have our higher low points being formed, so we are in this uptrend overall, right? So after seeing that, I know on the hourly time frame, that rejection in that 4 hourly also level of resistance, how these candles are forming right around here. I was willing to take that risk because I knew I was at like a nice high point of the market where there was a strong level of resistance, and my stop loss was just in the right risk management area of the 25 pips. So that's around 1250 on a 5 lot to lose. So if we see how price started forming here, we have our pretty much established our last higher low point around here. But then what happened was this entire thing right here was that transition type of phase. So we first had our level, one level of support being broken on this minor time frame, and then we have like this pullback, making equal highs along this line and never broke. Then we have that rejection, and then after that we have a lower high point. So that's telling me sellers are starting to come back into the market. So after that lower high point like kind of formed off of this nice bearish 15-minute candle with buyer's exhaustion at the top, boom, instant entry right there, because my stop loss was right, and I was at like, I had all my confirmations just lined up like what I just explained. And then we kind of just rolled this out a tad bit to we rolled this out to 13,834. So right around here. So this was good enough profit for me, right? So I seen price come back down and tapped off this, our main like kind of lower low point in this 15-minute type structure. And then once price pretty much bounced off of that, I had taken profit because the way structure was forming, it looks like it was about to bounce, and I didn't want price to retrace all the way against me, because obviously a previous trade shouldn't full on affect your future trades. But the way I was thinking, it's a challenge, right? So the goal is to hit the overall 8% or 5% goal. So I was more so accumulating my wins once I got past that break even, right? Because the account is at 99,000 at this point, 98,800, somewhere around there. So this is around 50 pips. So we won 2,400 off of that trade. So now the account is back at what, like 101,000 something. Good on cushion. So now my next trade, I was willing to, risk a bit more and be open with my trades and my analysis. So this was a solid trade. I like the way this trade played out, and the way it continued was also beautiful. So, but at this point, this is kind of like the problem with juggling multiple pairs, in my opinion. I do mainly only trade U30, but when I see something nice on a different pair, like, sometimes you gotta, with the yeah. That's like a discipline on my part. I gotta work on that too. But we won that joint, right? Same day. After I won this trade, I just lit, I was kind of done for the day. Next day came up the 21st, U30. We took some more sells at 30855. 30855 on the 20th. So I'll probably gotta check out the replay really quick. So we're still on that, pretty much the same analysis as earlier, right? We're overall still bearish. This is just like the next week. Still forming lower high points. This trade, I really love the way it played out. It was like really, really precise. So once we established 30855, sorry, let me just put this really quick first. Oh, that was almost on the money. Then we have our little 1,000 pip risk here. So when this happened, I didn't even realize it was a news event until it was news and it happened. So as soon as I realized it kind of was a news event, because the way it pushed was like, this was FOMC, I think, right? This, let me see, the 21st. Yeah, that was FOMC, right? So we had a possible head and shoulders pattern here forming, right? We're still overall in that bearish trend. So all we're doing is looking to get in on lower high points. Simple as that. Because we're still below, we're still overall below our key level, which is this purple line. So I'm still looking for bearish opportunities. So this was that level of resistance that it kind of broke above, and then it came back within that range. So meanwhile, I was just waiting on price to get back up to this level. I was waiting throughout all of this price action, being nice and patient. I was really proud of myself for that. So after price came back up, we had a left shoulder, right? Left shoulder, head, right shoulder, whatever. And the price came back up, tapped off of this purple line. So let's go down to our entry time frame. I think I might have been on the 5 minute with it. You know what I'm saying? So seeing this, I seen price come back up, touch this zone that I have marked off based on a higher time frame, which is near like this key level, and then price rejected a nice bearish candle. And then I had seen that honestly was enough for me to get in, just based off of where I'm at in the market. I'm kind of like almost at the apex of this overall 4-hour time frame structure. And then I entered based off of that. Then I had like my stop loss. So as soon as this pushed to these lows, my overall target for this was not even to get to that lower low point. It was mainly to hit where this black line is, or where this level of support is, because this was where price had a little bit of momentum to the upside. So price came back, we hit here, boom, after this news event happened. But when I think about news, I always think price is gonna, whipsaw a bit. So it pushed really fast. Anything that fast really goes away quick. So I'm thinking price is gonna retrace. So I took profits, boom, straight like that. It came back up tapped off of the zone, but at this point, I could care less. You know what I'm saying? I already hit. I don't want to say my quota because I really just trade based off of what I see. But I hit my target trade for the day, and I was not getting greedy, especially because it was FOMC at that time, and it was almost the end of the day. So there's little to no volume there. In terms of like overall, there's no volume, but obviously news pushed all that volume back down, and we had our break. So I was kind of just satisfied with my the money that I had made already off of that trade. So next day we took this 500 point loss right here, right? $540 because I trade point tens. And this loss, I probably just got in a bit too early here. I was playing this range overall. So yeah, these were all same trade days. This entire part right here was all same trade day on the 22nd. I kind of finessed the market right here. So on the 22nd, dang, to go over all of these things. Let me just find a range and I can tell y'all exactly how it's going about it rather than going by each and every entry. So yeah, right around here, yeah, I was finessing the market right here. This area, I remember this. Okay, so we have our impulse flag, right? So after this kind of like this structure was forming, continued to low, just seeing this kind of equals like almost like a doji on a daily time frame if it holds that volume a little bit. As you can see, it kind of was. So I don't want to get rid of too much mic up. So here, as you can see, the daily ended as a doji this whole 22nd day. So I was pretty much just playing in this range because the market was pretty much on pause that entire time. On pause this entire time. And I'm still looking for that bearish trend because it was overall bearish on U30. So next day comes this. I like to establish like where my parameters are for that area. So what I mean by that is that we have this leg, right? So once this pullback happened and then this rejection happened, off bucks, we can say this is our like kind of almost like a minor lower high point on this type of structure for this area, and then we have our base of this market. So after price breaks beneath the base, obviously we're probably just going to continue lower. Then we have our lower high point that established itself right here, boom. So I know if price breaks above this area, it's a chance we might see a steeper counter trend, right? So once this is established, this is probably like a 38.2 whatever. Fibs is fibs, you know. I respect it, but after you kind of used it for a while, you kind of know like your retracements by heart a little bit. So I guess we have like, we took this $500 L because we sold too early, right? 302.17, which was right around here, right? And yeah, this was right around that New York time. So this was when I was trading. Yeah, I sold a bit too early. I sold based off of this candle, and I got caught up in this pullback, and I took profit because I didn't like the way the hourly candle formed. Well, not took profit, but took my L for 500 points. This is what I mean when I'm a reactive trade. If I see something I don't like, I'm gonna hop out immediately and just look for an entry later on. I'm not in a rush. So after that, I took some, I guess a small buy, whatever, petty trade, 5 points, if that. And then we have our sells. So we're our sell for 300. So this is when like my experience comes in. I've been trading for 6 years. So I kind of have a trigger to know like when I need to scalp maybe, or when I need to intraday trade, maybe I should hold this trade for a swing trade kind of thing. So this was kind of like a scalp. These were all kind of like scalping type moves. So once I hit honestly 350, this kind of crossed out this L right here, 350, 200 difference, right? So I'm still down 200 on the day. So 30192 was the first buy I took. 30192, right? 30192. This was a really tight range, and the pip range was crazy, right? Just right here is 100 points. So this was probably a step. I was probably on like the 15-minute with this time frame. So we see our overall structure, right? Lower high point on this hourly time frame, possible continuation to be formed. So I know where my hot points are at. You really do not want to get caught up in this mess, like right in the middle. You either want to be at the top or at the bottom of these, like the lower high points or the high low points. So, which I kind of, I guess you can say I did get caught in a little bit, but I profited from it. But I was kind of looking for like just quick moves, you know? So this was right here. I had this kind of crossover on this. How I was looking at structure was we had this high low point on this 15-minute time frame to establish that counter trend, and then we had this next high low point form here. So after seeing this bullish engulfing, that was enough for me to take it back up, at least back to this type of resistance, because that's where our main lower high point is. So obviously really short stop loss beneath this area, because I don't want this price to go too much against me if I'm wrong, because the overall trend is bearish. And it was a slight counter trend. So these are the confirmations I pretty much used just based off of this. So we have this counter trend line, right? Had one touch, two touch, and then this was, I considered the third touch. So slight buys, boom, back to this level of resistance, clean cut, you know what I'm saying? And take profit. Simple as that. I'm not trying to stay in counter trends too long. Once that counter trend line was broken, boom, I'm looking for continuation of sales beyond that counter trend line point, because that's showing me bearish pressures coming back into the market. This trend is done, right? Lower high point on the 15-minute, break of the counter trend line, last higher low point broken. So I'm looking for continuation of sales beyond this counter trend line. So next entry was I also took buys here again, I guess, because of this range. Made 2,000 off of this. So at this point, I think that counts up what, maybe just based off of these trades, I was pretty close, maybe 104, 105-ish range. Yeah, Bayou 30 here, 30097. 30097. So like I'm saying, I'm just playing within this hourly range. Still around my hotspot time, New York session, right? And I took profit around, what was the profit on there? 2,000. So right around here. So price broke that counter trend line that we had drawn off, right? Boom. So sellers possibly coming into the market, but notice that our main low on this hourly time, on the overall hourly time frame, was never broken. It came down, tested it, seller's exhaustion, and then we have a push tapping off of this 66 MA. This is what I mean. The moving averages is an extra confirmation rather than it bounced off, I'm taking entries now. So price action always comes first for me. Price action and market structure. So this level right here was never broken in this entire area, right? And according to like this, the market structure, higher low point here, higher low point here, right? This main higher low point was never broken. This is where we got the big push from. This is the level we got the big push from. So we're still kind of playing within this range. Because if you're looking at structure, right, and this is like on an hourly time frame, within this entire like counter trend type of period, you can see micro trends within that. So within that entire area, you'll probably see something like this on the lower time frames. So price can do whatever it wants in those range, but as long as it maintains within this this impulse leg, structure is still being maintained. So just the market here, right? We have our higher low point established, but we're still within this entire impulse leg. So if price comes down here and it respects it, this minor uptrend is still being maintained, in my opinion. You know, trading is very subjective, so this is just the way I see the market. So once this was tested multiple times, and I think on even on an hourly, it kind of looked pretty decent. So we had kind of like this impulse move up, impulse move down, and then this area was kind of tested. Like it was faking like it wanted to break, but it never broke. It like made this doji, and then like that was a wrap after that. So yeah, I think I'm gonna end up having to break this into two parts because this gen is already out. So I'll do the phase two is kind of quicker than this though. So after this was established, right, price came back and tested this level again. We've seen this exhaustion, buying opportunity, boom, right back to those highs again. Like I said before, same target right up here because I'm overall still looking for those bearish players to come back into the market. But I think I'm gonna end it there maybe. Yeah, because I was around, this was actually around 107-ish, right? 107,000-ish after those trades we just went through. And then after that, I was just trying to honestly just hit the target the next day. I only had like 1,000 left. So I took like a small sells on AU, 65753 on the 22nd, 65753. Let me see. Yeah, that was right around here. So I already knew the market's overall bearish is fuck, you know what I'm saying? So it was a petty trade in a sense. I knew it was gonna sell off. I just knew AU was just gonna continue its seller's pressure because King Dollar has been like rolling over everybody's heads. So 22nd, I'm trying to do this really quick. 22nd, 65753, 65753, 65. So that was right here. No, it's 23rd, 65. Yeah, right here. So he was already in this range. It broke beneath my main low point here. Boom. Once it broke beneath here, we have that tested candle, and then I took that sell like right around here. Once this broke, I had this nice candle. Because I was just like I said, I was just looking to finish the challenge. I only had $1,000 left, so I only needed 20 pips. So once that was established, boom, I only needed 10 pips, right? Because we're trading 5 lots, so that's $500. Yeah, because I took this trade here, then I took this next trade here to try to hit I guess I lit around like, I need like 800 left. So right around here, it made this nice bearish candle, done. Challenge over, phase one pass, right? And then, yeah, that was pretty much it. So I'm probably just gonna stop it right here because I'm pretty much at the hour mark. Phase two will be much quicker. Part two, whatever. Thank y'all for watching. No, appreciate y'all, and I'll see y'all on the next one.